Hello, this is Jordan. This video is being recorded on the afternoon of Monday, March 27th, 2023. Thank you so much for joining me. In this video, I am going to take a look at recently in recent decades how long it has taken gold to break out and make a higher high after the rate hike cycle from the Fed. And so in the context of that, if we're looking at a macro context, gold has held up really, really well. And this is something I've talked about in past videos. I think I tweeted something about this in January, because if you look at the Fed's hiking cycle, the second most sharpest or most significant hiking cycle in history, you look at least a year ago or so, the dollar over a 12 or 15 month period had something like a 23 or 25% gain. Had this huge move, interest rates going from 0 to 5% now, bond yields rising. So you think about all these things, and gold corrected only 20%. I mean, yes, it's 20% significant, but in the context of history and all these things that happened, gold has held up really, really well. And that's why, we're just about at the end of the Fed rate hike cycle, and gold is, within a sniff of making a new all-time high. So I don't know if what's going to happen this week. Maybe it'll take 2, 3, or 4 months. Who knows? But it's held up really, really well. It's in really good position for that huge breakout this year. And so in this chart, there's a couple things I'm going to go over. We have gold at the top there, the Fed funds rate in the middle, the real 10-year yield at the bottom. And so the first thing I want to look at is the time it took. Gold made a peak around these rate hike cycles, whether a little bit before it or during it, and then how long it took gold after that cycle or during that cycle to make a higher high and surpass that previous high. So I annotated here in black the time. So the red, that's the peak I'm referring to around the rate hike cycle, and then the blue is the next time gold was able to surpass that high. So you go back to the mid-90s, that first one took 2.5 years, right around 99 to 2001, the double bottom in gold. The bull market, the secular bull market in the gold stocks started at the end of 2000 ahead of gold. So if we look at that time, it took 2.7 years from that peak that occurred as the cycle was beginning, and the Fed hikes. You get the decline in gold. So that took 2.7 years. Now, if we go to the mid 2000s, it was a little bit different, because that rate hiking cycle was gold had its second best performance, or maybe third, depending on in the 70s there was 1 point, maybe 2. So what happened in the mid 2000s is a bit of an outlier. But if we're looking at how long it took gold to really sustain, it exceeded the high. You look at the high at the end of 2004, that first peak. It was able to exceed that in, I don't know, call it 6, 7, or maybe it was 8 or 9 months. But then gold came back and consolidated, for another 6, 7 months or so. So ultimately, it really took, it really took 20 months until gold had a trending, breakout type of move. And then we can look at the peak that gold had, that huge run it made into 2006, towards the end of that hiking cycle. And so, gold had that peak, and then it took gold 16 months from that peak to the next breakout, which, coincided with the start of a new cutting cycle. So, I mean, they're not mid 2000s. These are not perfect comparisons, but you get a sense of how long these moves can take. And so looking at 2018, 2019, that period, it took, you had a lower high in early 2018. I mean, it was pretty close to the 2016 high, but from that point, it took another 14 months for gold to get going and surpass that. So where we are here and now, we're 12 months into it. So again, who knows? Maybe it's going to be 13 months. Maybe it's going to be 16 months. You know, nobody can predict the future, but it seems like this is something that's going to happen this year and likely in the coming months. So that again aligns with the history that we've looked at here. Now let's look at, you know, in that analysis we're looking at, you know, we're kind of just looking at it in a vacuum. We're not considering other factors, and so, you know, for example, like how severe the tightening was and that sort of thing. So we go down to the Fed funds rate, the real 10-year yield especially. And so I've pointed this out, and I said this at the beginning. If you look at the bottom right there, the rebound, the surge higher in the real 10-year yield was more significant than at any point, you know, in the last 25 years, you know, since TIPS, because it's based on the TIPS market, since TIPS started trading. So that's obviously extremely significant. If you bump up a little bit, you look at the increase in the Fed funds, it's the sharpest and the highest over that period. I mean, it's been the sharpest, most significant Fed tightening cycle since the early 80s. And so, again, you factor that in. So if we just pause for a second, and we just look at gold in a vacuum, we look at the data at the top, and just considering that, you know, gold almost, you know, basically within a hair or two of the high, 12 months since the high in early 22. So, I mean, this is really significant relative strength just by itself. And then we factor in, we look at the real yields there at the bottom right, and that rise. I mean, that suggests that gold should have been weaker and that it should have corrected more. So again, when we're factoring in, you know, and I probably should have included the rebound in the dollar to add even more context, but we're factoring all these things, and then we're looking at how long it could potentially take gold to surpass the previous high. I mean, it's on track. We're going to see that big breakout this year. It's just a question of, I mean, is it going to be in 4 months or, you know, 1 week or 2 or 3 months? I don't know. But this is just, you know, looking at stuff under the surface and more evidence that shows that, you know, gold has held up really well and that this market is primed for a huge breakout over the coming months. And I mean, this is going to be the start of a great cyclical bull market, but also the start of a secular bull market. It's really exciting for precious metals. And, you know, recent years have been really difficult, but, you know, now we're going to have a chance to see life-changing gains potentially. That's it for this video. Let me know what you think in the comments, and I'll talk to you guys again. Thank you so much.